Welcome to Trade Pro. I'm on the 1 minute chart of Bitcoin, about to show you a 1 minute scalping strategy and then test it 100 times in a row so you can see how it performs over a series of trades. This strategy consists of hidden divergence on the RSI, the stochastic indicator for entries, a 50 period EMA, and a 200 period EMA. Now, I thought it was a good time to show a strategy like this because I haven't been showing as much love to the crypto people on my channel. And I also opened up an old BuyBit account of mine and wanted to do a small account challenge for you guys on the channel. Doing it on the 1 minute time frame is fun for the channel. It's fun for me to do, and you can grow a small account much faster that way. So that's the main purpose of it. And you know, the reason I chose BuyBit was BuyBit has just a great fee structure. So for limit orders, you actually get a rebate, so they pay you to take limit orders. Just by entering a limit order, they pay you. And then for market executions, the fees used to be something like 0.05%, so very, very low. I haven't checked if they've changed their fee structure, but a couple years back when I used to trade on BuyBit, their fee structure was extremely low and perfect for low time frame scalping. So what happened was I checked on my BuyBit account in order to prepare for doing a small account challenge on my channel, and then realized there was still a small balance on my old account, and it used to be worth next to nothing. But since Bitcoin's value has gone up so much, the account went from being worth like 35 bucks to being worth something like 260 bucks, which I thought was pretty funny to find it like that. So I won't actually need to deposit anything onto the account because it already has enough for a small account challenge. So just thought that was kind of a funny thing. But anyway, let's get to the actual strategy here. And the first thing I want to start with this strategy is talking about the conditions of market where you're going to find the best results. And this goes for any trend following strategy. You really want to look for market conditions where you're in a strong defined trend. Okay, so over here you can see the 50 period EMA is just right up on the 200 period EMA, and this is where you don't want to be taking signals. When you are in conditions like this, almost all the signals are going to be winners. Really nice strong trend. The 50 period EMA is pulled away from the 200 period EMA. And another thing with the 50 and the 200 period EMA is when price goes up between the 50 and the 200, like in here, you don't want to be taking signals because that could often be a reversal zone or a choppy zone or something, or market switching into a range. So just bear that in mind with all the strategies I show on my channel. Almost all of them are going to perform very well when you're taking signals in a nice market condition that's trending nicely. Okay, so I know that's subjective and I acknowledge that, and you need to acknowledge that as well when you are trying to decide if you should take a trade or not. And this really comes down to a market experience. You're going to have trouble with your emotions and really sticking to a system and really being honest with yourself as well in your trading performance. So something like this, where you're kind of deciding not to take a trade in certain market conditions, you need to be really honest with yourself and have enough experience to be able to do that and not mess yourself up. Okay, so just wanted to talk about that a little bit, as I haven't really mentioned that too much on the channel, but I mean, it's obvious, everyone knows that, and it is subjective, so it's not something I like to talk about too much on the channel. But for those people who have been trading for a while, who are experienced, you know, it's how it is. You should be trying your best to identify the best market conditions for trading, and when you're a trend trader, that is in nice trending conditions like this. Okay, so just want to start that out. This is the type of condition that is going to be ideal for this strategy and for any trending condition strategy. So the actual strategy is as follows. So when price is below both the 200 period EMA and the 50 period EMA, you're only looking to take short positions. When price is above both the 50 and the 200 EMA, you're only looking for long positions. The first thing you look for is the hidden bearish divergence. If price is under the 200 EMA, And if it's above, you're looking for hidden bullish divergence. So in this example, we get a hidden bearish divergence signal right here on this candle. The next thing you look for after you find the hidden divergence is a stochastic cross in the direction of that divergence signal. So cross down on the stochastic happens on this candle. Then you're going to place your entry and put the stop loss just above the swing high before that entry. You're going to target 2 times the risk, and that is the full strategy. Now, let's go to this other example here. And same thing, hidden bearish divergence signal comes in. It's actually above the 50-period EMA, but when the stochastic cross happens, it is below. So you're good, it closes below. And for this one, it's such a close stop loss that it would be necessary to maybe pull it out to above this wick over here, okay? And once again, this is kind of subjective, so you can also take an ATR, more rigid method of choosing the stop loss placement. All right, so there's another signal right here, cross down on this candle, and taking that position, stop loss, and 2 times. So that's the strategy. I think this one here, this signal, is going to get stopped out, but that's fine. Anyway, that is the strategy. It's very simple. I'm going to do the 100 tests in a row, and we'll see how it performs, and I'll potentially use this on the small account challenge and see how it goes. All right, the results are in after the 100 back tests on Bitcoin's 1-minute chart, and it only took 9 days of price data to find the 100 signals. This strategy did very well using a 1-to-2 risk reward ratio. There were 51 winners, 49 losses, giving it a 51% win rate. The most wins in a row was 6, and the most losses in a row was also 6. The gain on the account, 53% over the series of 100 trades on this set of price data. So extremely good result from this one, almost hitting that top spot on the spreadsheet. So I will compare this to the other strategies on the spreadsheet in just a second. Theoretically, you could actually get 53% if you're using BuyBit and only taking limit orders. And you could probably even get that 51% win rate higher if you are good at identifying a strong trend and taking trades in a good trend. But for those of you who need to keep things fully objective, it still does very well, as that's how I tested it in a very objective manner. The only thing that was slightly subjective in this test was the actual stop loss placement, but almost all of them, I just placed it right above that nearest swing high from where the cross down occurred. So there's not much subjectiveness on that. And I did not take into account trending or not trending environments. I just took all the signals. So don't worry about that part for this specific test. Just that stop loss placement is the only thing that's slightly subjective on this test that I just did. So theoretically, you could do very good using this strategy following these rules. All right, so now I'm going to pop it up on the spreadsheet and do a little comparison. All right, so here it is on the spreadsheet falling at spot number 2, right below its big brother. And the only difference between these two tests was the number 1 spot strategy test was done on the 30-minute time frame. So instead of the 1 minute, it was done with euro dollar instead of Bitcoin, and the divergence indicator that I used for the 1 minute test, I did not use on the 30-minute test. I used the divergence finding by my own eye. So I just manually found all the hidden divergence using my own eye instead of with the indicator. So other than those 3 things, everything was done exactly the same. It's the same strategy still. So these did fall right next to each other, and I'm assuming if I did the same test on the 30-minute, on a different set of price data, it's probably going to range all over here on the results. Each set of 100 tests on each set of price data, you're going to have quite a large range on that gain and account figure and the win rate just based on each set of price data. So just keep that in mind. It's going to vary depending on the set of price data. So, each of these tests could have fallen down at spot number 10 or spot number 15 even. So just because these both got up here doesn't mean if I did another set of price data that it's not going to, fall down here somewhere. But it's a good sign that they both fell all the way up at the top. It's a very good sign for this strategy, and that's why this is how I trade. So out of any of these tests, the only one that I actually use to trade my own account is involving this sort of strategy. This is very similar to how I trade. So there's a reason for that. There's a reason I trade like that. It's because it's a good way of trading. So the only other thing I could compare these two tests to is, let's see, where is it? Highest, here it is, this one. The 5-minute highest profit strategy tested 100 times on the 5-minute chart full results. So this was done with the similar method of trading, but the difference was I used the absolute strength histogram as the entry signal instead of the stochastic, and the absolute strength histogram gave horrible entries. They were just really late. It's kind of like the MACD. It gave a much later entry, so it just didn't work as well with this sort of system. But not to say the absolute strength histogram is bad in all cases. As we can see, it had a very good test up here, but it just didn't do well with the particular setup that I was using. But anyway, does very well, and it's on the 1-minute chart. So if you aren't the type of person who can really focus in and be ready for that high intensity environment, then I probably would not recommend trading on a 1-minute time frame. Stick to that 30-minute, 15, but not the one if you're not ready to really focus. You don't have a lot of experience with quickly handling the position sizing and calculations and such. So just keep that in mind. But anyway, thank you guys for watching. If you're still watching right now, you better be subscribed and you better like the video. Thank you very much. I appreciate all of you, and have a nice night.